What's up, guys? It's Brian from Hashware Hub. It's about January, my God. It's February 1st, 2018, about 1:28 p.m. Eastern Time. I'm coming to you with a brand new trading video. This one's going to be on Litecoin. We'll possibly touch on Bitcoin a bit. But first, before we get to it, hit subscribe, hit the notification bell, upvote, re-steam if you guys are on DTube, and or steam it. If you're not, links are down below. Highly recommend getting your butts on over there. And let's get right into it. So what we're looking at is right now a daily chart on Litecoin, and one of the things I wanted to point out is the QQE indicator. Right now the QQE indicator is, let's call it about 38, and the market has been lower than this point with regards to the QQE indicator. This is about August 2016, and then a whole bunch of times prior to that. So I see a lot of people out there, quoting certain MACD levels, and then the market will turn from there. We don't look at the market like that. I've never seen that really work before, but I guess only time will tell. We don't really look to see an indicator to hit a certain level and then feel that the market's going to turn from there. We go about it the way in which I've been illustrating for quite some time. And we're going to continue to go ahead and do that. So let's look at this on a 4-hour basis. So one of the things I feel that didn't come across enough on our Bitcoin video is that we do feel that the market is going to continue to go down. Some people have mentioned that, and in that video in particular, that now they thought we were thinking that we wanted the market to go up. So let me explain it really quick. Yes, we want the market to go up. Why? We want the market to go up because we're believers in cryptocurrency. We're believers in blockchain technology and everything it can provide the world, that we really feel that the world needs. But the reason why we want it to go down is we want it to go down for the health of the correction, for the health of the community, for the health of cryptocurrencies overall. A healthy correction is good for the market. For many of you, this may be the first correction you've ever been through. I've been through countless corrections since about 1999. And you can count basically every correction in just about every single market that's been out there, and I've pretty much have been in it, in the trenches. So this is a typical correction. There's nothing atypical about this at all. It is 100% textbook. People are saying it's bubble-like. No, it's not bubble-like. It's a sign of any market that had a lot of money pumping into it. Now, one of the things that this market has attracted that many other markets haven't is a lot of people that have never traded a single thing in their lives, or have never even looked to trade anything in their life, never even interested in the traditional markets or anything, or commodities or anything else like that. So what we find ourselves is in a sticky situation, a place whereby we have a lot of people that have never looked at these things before, that take a snippet of what you say and then run with it. Trading is an institution. Trading is not a hobby. Trading is a profession. The same way becoming a doctor takes tons of training, the same thing is the case when it comes to trading. You need to be in umpteen markets, in umpteen various different chart patterns and market scenarios and sell-offs and stuff like that, okay, to really thicken your skin enough, callous yourself enough in order to think clearly through these ups and downs. And that's what we're trying to provide on this channel. So, yes, I do want the market to go down. I want the market to go down big, and I want the market to go down fast, and I want the market to go down to levels that make sense. In other words, support levels that make sense. Okay? And I wanted to do it in a swift fashion to get this correction over with, so we can get on our merry way back up, because that's where I believe we will eventually go. However, corrections and the market, all markets, operate in a manner to specifically piss the hell out of you. It's as simple as that. They test your patience in every possible way. They pick a door at your feelings, and they will make you learn things about yourself you never even knew. And if you're in the market and you're taking it seriously, I'd imagine my last comment is probably rather eye-opening, that you will learn things about yourself that you never knew. How you react underneath stress, how you react when it comes to losing money, how you react when it comes to making money, how you manage yourself, your emotions, your feelings, everything that surrounds that. So what we're trying to do is provide some sort of a looking glass, and it's one of the reasons why we do have a lot of these lines up here, is to give you an idea of what could happen and to prepare yourself. Okay? What's that saying? Chance favors the prepared? Something along those lines. It's the same exact thing here. Same exact thing here. So, with that said, this is Litecoin again. And we are currently at, call it about $143. This is a Fibonacci level that I had mentioned prior in a prior video, if I'm not mistaken. This level right here below it is about $138. And this is a level of the bottom of this candle right here. And this is a range where the market could possibly hang out in for a bit. We could see a run up here, and then possibly it could come down again. There's a good chance that this is just an A, B, C correction, and that's the case. This would have to be 5 ways down. If this is 5 ways down and these waves are like 3 waves, then we possibly could have a little bit longer to run. And if we have a little bit longer to run, I would not, it's not out of the ordinary. I would not be surprised if this spooks the market a bit more and the market continues to run down, possibly to the lower end of this wedge. So we have a wedge. The wedge, there's a few different wedges, clearly. And right now, one of the wedges that we're highly concentrating on is the wedge that is created by this top line here, this top mustard line right here. Okay, and the bottom line is this blue line. All right. This triangle right here is where the market busted through. We were hoping that possibly it would go ahead and make an E here, and possibly even go further and hit the blue line up here, and then hopefully come back down to make a larger E in the larger triangle. So that clearly, obviously, is not happening, but it's nothing super out of the ordinary. So again, the QQE indicator is negative, and it appears to be coming down. If this is a D, then we would be making an E, and if it's an E that we're making here, then normally, according to Elliott wave theory, then this market would come up. So remember, this would be an A, this would be a B, this would be a C, we would have made D right here, and then this would be an E right here. So again, E and then up is traditionally what happens with these type of wedges. In my estimation, there are some people that are out there that are saying that February, the beginning of February, is going to be the end of this correction. I can make arguments to say that yes, that's the case, but I don't believe that's to be the case. I feel that this would be a little bit too short. So I do believe possibly the beginning of March would be when this correction is over, and I can make a case either way, but that's just my gut feeling. So with that said, we're going to leave it there. If you guys have any questions at all, let us know. And any comments, same there too. And yeah, happy trading. Speak to you soon.